2,434 crore truth. The PNB shock that shook the entire banking system. Imagine. It's 2 a.m. midnight silence everywhere. In a bank building, only a few lights are still on. All the computers are shut down. But on one screen some digits are still blinking. Transactions are being opened one by one. Files are being checked. Emails are being verified. And suddenly a senior officer's eyes widen. His face turns pale. His hand freezes. The number flashing on the screen is not some ordinary figure. This is not a matter of lakhs or crores. It crosses lakhs, crores and hundreds of crores, and finally stops at 2,434 crore. And that is where a story begins, of questions, suspicion, system failure, and the fear of whether the common man's deposited money is really safe. This is the story of one of the country's oldest, biggest, and most trusted banks, Punjab National Bank. The bank that people consider a fortress for their money's safety. The bank that has given wings to millions of dreams through loans. And the SREI Bank is once again in the headlines. But this time not because of any new scheme, any new facility, or any proud achievement, but because of a scam so big that it has once again forced people to think, is our money really safe? Is the system really as strong as it is shown to be? This story begins with a simple technical internal review, routine audit, routine checking. But hidden inside this routine was something extraordinary. It was discovered that something was terribly wrong in two major corporate accounts. These accounts did not belong to some small business or random company. They belonged to a business group that has been known for decades in the name of infrastructure and equipment finance, the SREI Group. Bank records kept opening, transactions kept coming to light, and slowly the picture became clear, a picture that could shock anyone's mind. Two accounts, two companies, and in both of them, separate massive financial messes that together took the total fraud amount straight to 2,434 crore. On one side was the account of SREI Equipment Finance Limited. On the other side, the account of SREI Infrastructure Finance Limited. And in both, the same story, violation of rules, misuse of loans, and a wave of financial irregularities. In banking language, this was classified as loan fraud. But in simple words, understand it like this was outright looting. Now the question arises, how did this happen? How can a company misuse a bank's money at such a massive level despite thousands of rules, policies, audits, compliances, and systems? The answer is simple. Where greed increases, calculation stops. Where ambitions become uncontrolled, ethics disappear. A company takes money from the bank. Not small amounts, but loans worth thousands of crores. On paper it is written, this money will be used for a project, for infrastructure development, or for equipment finance. But when the money leaves the account, its direction changes. The money goes somewhere else, into other activities, into businesses that have nothing to do with the original bank agreement. Some funds here, some there, some into subsidiaries, some into shell firms. And slowly a financial maze begins. This is not something done suddenly. This is planned. This is exploitation of the system. First, the loan is taken. Then for some time EMI are paid properly so that no doubt is created. Then slowly the payments weaken. Then come excuses. Then demands for restructuring. And then one day, default. When the bank starts talking about recovery, it discovers that the money has already vanished elsewhere. Assets were either overvalued or didn't exist at all. And the ones that did exist were not worth what they were shown to be. The same happened with the SREI Group. Once a big name in infrastructure funding, strong identity in the market, years of brilliant performance. Then slowly debts started rising. Borrowings became uncontrollable. Loan repayment became weaker and weaker. And then things deteriorated so much that the system itself had to step in. And when the system steps in, It doesn't just scan financial statements, it scans the very soul of the company. Governance failures come to light. Mismanagement is exposed. And along with it comes that painful truth, how far the money was wrongly circulated. But this story is not just about the borrowers. This is also the story of a bank. When such news comes, the first questions people ask are, will the bank collapse? Is my money in danger? Is another big banking crisis coming? And this fear is not wrong either, because history is witness. After every scam, people panic, they get scared, and their trust shakes. But this time the story was a little different. This time the bank was prepared. This time the system was alert. This time PNB had already created a shield. The bank had already classified this loan under the non-performing asset category and made 100% provisioning. In simple words, the bank had already set aside this amount from its profits, so that even if the money never comes back, the bank does not become financially weak. That means customers' money, the savings of normal account holders, the trust of FD holders, everything is in the safe zone. The bank's capital is strong. The provision coverage ratio is almost complete. And the biggest thing, the bank itself detected and reported the fraud. Meaning this scam was caught, not hidden. But still one question remains, when we constantly talk about banking reforms, when we keep talking about strengthening the system, then why do such frauds keep happening again and again? The answer is uncomfortable, but true. The system is strong, but loopholes still exist. Rules are there, but human greed still proves more powerful than them. And then comes the matter of PNB past, a name that, as soon as you hear it, brings back an old wound, the Nirav Modi scam. That scam wrote a terrifying chapter in India's banking history. Letters of undertaking, the diamond business. And suddenly a wave of panic among millions of account holders. After that incident, the banking system learned a lot, changed a lot, tightened a lot. And as a result, today the ability to detect has increased. Transparency has increased. Monitoring has become stronger. But it is also true that trust is something which, once shattered, takes a very long time to rebuild. When a bank's name gets linked to a scam, it's not just the numbers that get damaged. People's faith gets wounded. A common person who saves money for months slowly collects it, makes FD, deposits their life savings. Only one question keeps revolving in their mind. Is my money safe? But the real question doesn't end there. The real question is for the system. Will such frauds stop in the future? Will banks become stricter? Will borrowers no longer be able to escape accountability? The answer is both yes and no. Technology is making banking more secure. AI-based monitoring, strict compliance frameworks, forensic audits, these are all strengthening the system. But fraudsters are also becoming smarter. They're finding new ways, discovering new technical loopholes. And that is why awareness is extremely important. Corporate governance is not just a word, it is the backbone of the banking system.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.